right, guys, excited to get you yet another trade recap. I'm going to be recapping this AFRM, Affirm Holdings options trade that I took. I grabbed the 27.5 puts. I played them for about 40%. They ended up going over 250%. Had I have held for the entirety of the move, it would have been an awesome gain, but nonetheless, profit is profit. So now I want to walk you guys through exactly what it was that I was seeing that gave me the conviction to enter this trade. So first things first, I've got this $28 level drawn here on my chart. Where did I find this $28 level? Well, if we go ahead and we look left on the chart, and again, this is the 5-minute chart. I like to look at the 5-minute when creating or identifying these key levels because it's the time frame that I'm going to actually execute my trades on. So we see 28 bucks was previous support in the prior session, okay? And if we scroll left again, we see that this $28 area here is 28.25. Look, first candle of the day here came down to 28, okay? So I start to tell myself there is strong support at $28, which means if it is broken, that could be a break of key support, and that could mean that there's a strong opportunity to take a trade. And in this case, there most certainly was. So what do I look for once the day starts and once the market actually opens? I'm watching for a break of this level. So as soon as we break below 28, light bulb goes off, right? I knew that was strong support. If strong support is being broken, what I'm going to watch for is a retest of that level in order to now confirm previous support as resistance, right? We want the support to flip to resistance. So what I did was I added on this green candle, okay? So we got to pop back up to 28, and I went ahead and I added these puts. Now let's take a look at the indicators that I use intraday. I always use the yellow 20 EMA, the 9 EMA, which is the blue line, and VWAP. So all three of my indicators that I use intraday to make these day trades or to execute these day trades were above the current price. So I had 4 areas of resistance, okay? So I had the $28 level, I had VWAP, the blue 9 EMA, and the yellow 20 EMA, all above price, okay? A rule of mine, I follow this 99% of the time unless there's an exception and, I'm looking to take a trade maybe off of resistance or off of support for, whatever reason. But 99% of the time when I'm buying puts, I want the EMAs to be above the price, meaning that the EMAs are serving as resistance. If I'm buying calls, I want the EMAs to be below the price, meaning the EMAs are serving as support. So in this case, again, I have 4 different levels of resistance. So I have a break of support below that $28 level. I have my EMAs above as resistance. And what do you know, guys? This trade worked out really, really well. Again, went 250%. And this was simply playing that break of the key level. And when it comes time to execute these trades, guys, you do your homework at night. You chart those levels at night. You chart that key support and key resistance. And when the time comes, you simply execute the way you know how to execute. And say this trade had not panned out for me, okay? Let's say something out of the ordinary happens, or I'm playing this 28 break and I wasn't able to recognize that the broader market was preparing to trade higher. So yes, although we break below this support, it could be a fake out, right? I cut the trade as quickly as I believe that I'm wrong, or I'll just keep a really tight stop loss. So if I'm adding near this $28 mark that I know serves as resistance, let's go ahead and actually zoom in here because there's another point that I'd like to make. So if I'm adding close to this level, that means that, I could put on a 15% stop, right? That'll give me plenty of room. Because if we're so close to here, a 50% stop is going to be stopping somewhere up here, right? So that just invalidates the trade anyways. Okay, so I can keep a 15% stop. But you do want to give yourself some wiggle room, okay? And the reason for that is look at this wick. So I actually remember during this trade, we wicked higher as soon as I added, okay? Although the idea was correct and my execution was flawless, I waited for that retest, we wicked higher, okay? So we quickly went above that now resistance level, but quickly pulled back down. So those wicks can fake you out at times. So what you want to do is you want to put yourself in a position to trade the chart versus trading the options premium. So I mentioned a 15% stop. Yes, that is a good way of thinking, and I typically keep a 15% stop, but that makes more sense on a Monday or Tuesday if you're trading the weekly options. Now, why is that? It's because those premiums are moving faster the further you progress in the week, okay? So let's say on that Thursday or Friday when you have 1 day or 0 days until expiration, a 15% stop loss is not going to give you a lot of wiggle room. So instead, the proper way of thinking, at least in my opinion, is have a max loss amount, okay? So let's say the max that I'm willing to lose on the trade is $100. If I enter with a $1,000 position size, I'm going to keep a 10% stop. Now, if it's a Wednesday, Thursday, or Friday, ask yourself, is a 10% stop enough? I may have gotten wicked out, right? I may have gotten stopped out of this trade if I only kept a 10% stop. So that's something to be mindful of as well. Just giving yourself the best opportunity. So in that case, if it's later in the week, it might make more sense to go half size and keep a wider stop. But I hope you guys were able to benefit from this video. Again, pretty simple trade, but I think it's important for you guys to see exactly why I'm taking these trades start to finish. Again, the level I found was in my charting the night before. This doesn't happen on the fly. I like to come in prepared, and then I like to simply, press buttons, as people say, and be able to execute. But again, hope you guys enjoyed the video. If you did, make sure to like and subscribe. We've got plenty more on the way. Good luck trading tomorrow, everybody.